Hey, JJ here with the Art of Value again. This is episode 73. So today I want to talk about the Chinese company Pinduoduo. I haven't talked about this on the pod for a long time, but I have before. Would have been a while ago. And a lot's happened, and it's reported it's been earnings season, and I just want to go through it. If you've been here before, you might know I like to try and keep these short. So this is kind of an in-depth one. I did listen to the earnings call, and I might do that part tomorrow if we go too far over 10 minutes. I just like to do 10-minute podcasts daily rather than long ones. So let's get on with it. So what is it? If you don't know, if you're on the screen on Spotify video or YouTube video, you'll see the logo on the screen and Pinduoduo Inc. With the tagline "Together, more savings, more fun." Sometimes it's been described as like Costco, online Costco, and or cross between Costco and Disney. I don't think that's quite right, but it's kind of the gamification of buying where they have little games, and it's group buying and group buying as well. Anyway, I'll give you a description, two different descriptions here that I found. I've got my own, but I'm just going to read off two of the sites. I got this from Ticker Terminal. Pinduoduo, through its subsidiaries, operates an e-commerce platform in the People's Republic of China. It operates Pinduoduo, a mobile platform that offers a range of products, including apparel, shoes, bags, mother and child care products, food and beverage, fresh produce, electronic appliances, furniture and household goods, cosmetics and other personal care items, sports and fitness items, and auto accessories. Sounds a bit like Amazon in a way, doesn't it? Well, that's it's partly true. The company, but it's mobile only. The company was formerly known as Walnut Street Group. Oh, we don't need to know that. Blah blah blah. Changed to Pinduoduo in 2018. Incorporated to 2015. Was incorporated in 2015 and headquartered in Shanghai, the People's Republic of China. And another description. Is a different one. Descriptions can be different. It's best to write your own, I think, when you're analyzing, and I have. But I'm just going to I just wanted to remind myself of this. So this is from another site. Pinduoduo is the third largest e-commerce platform by gross merchandise volume and the largest platform by active buyer in China. In 2020, it achieved 1.6 billion CNY. That's 255.6 billion US dollars of gross merchandise volume. And we'll go in US dollars, 324.2 of annual spending per active buyer. So get this, it had 8.6 million active merchants, 8.6 million active merchants in 2020 and 867 million active buyers in the year ended September 2021. 867. So they get the scale of these Chinese e-commerce companies. 867 million active buyers. It was one of the top two players in next day to grocery self-collect services, similar to community group purchasing. So what happens is I'm not going to explain the whole service. There's an app that you buy things really cheaply by grouping with people, and there are various ways to group together group buying. It's not like Groupon, really, not like that at all. Where groups of consumers place fresh food and grocery orders online and collect at designated self-collect points the next day with the help of group leaders in each community. So, and as we'll see in these earnings, they're really focusing on groceries, on fresh groceries. They kind of want to be the biggest grocer in the world, I read a couple of quarters ago. They're really aiming to be the biggest grocery in the south of the world. And why couldn't they with that many with that many customers? But the growth is kind of starting to slow because the growth in active buyers. But we'll see in the results. So let's just go on the screen. We're going to move to the graphs, the market graphs. The Pinduoduo is an ADR in the US. It's problematic for some people who think they're going to be delisted. I don't see this such a big issue, really. I don't think it's going to happen. It's possible, but they could, get moved to Hong Kong. But anyway, so in the past 5 years, if you see on the screen, there was kind of a bubble. It went along with the innovation kind of tech bubble. So, and it just went pretty nuts. 96.34 over the past 5 years now after the big drawdown. And so it's 2.56% down since April 2020. So basically that whole COVID bubble, post-COVID bubble, is back to almost pre-COVID. And year to date, it's down 13.9%. Disclaimer, I do own the stock. Did I say that before? And this is not financial advice at all. I'm not advising that you buy or recommend buying. And I've had a big drawdown. It's like 49% right now, and that's after 15%. That's after a 15% gain, and just in the last after earnings, it gained 15%. Investors were reasonably happy, but also down 65% in the past year. And yep, you can just look like a classic bubble. Looks like a classic bubble. Probably no accident that ARK bought it, but they've completely sold out of it. And one of my favorite investors, I think one of the best investors in the world, Li Lu, owned it. I say owned it because he sold out, which his owning of it, he only owned like 1% of his portfolio. And I think he bought around $75 around there. It's now 48.30. So, but he sold out earlier on. I think, was it last quarter or the quarter before? Probably had a good time, but I'm holding on. I held on, and I'm down, but we'll see. We're not going to go into valuation right now. And so this is just after earnings. This is a news article. Pinduoduo quarterly earnings top estimates. Chinese e-commerce stocks rise. China e-commerce company PDD, that's the ticker, reported first quarter financial results early Friday that topped estimates. PDD stock shot up on the earnings report. Pinduoduo reported adjusted earnings of 29 cents a share on revenue of 3.75 billion. Analysts expected Pinduoduo to report earnings of 25 cents a share on revenue of 3.08 billion. So a beat there. Average monthly active users rose 4% to 751 million, and active buyers in the 12 months to March 31st increased 7%. So 7% to 881.9, so 882 million. So, that's growth, but it's not huge growth like they've had in past years. Its growth is slowing down, and they kind of explain that in the earnings call. PDD stock rose 15.2% to close 48.3, so that's 15% up. So, I was down significantly. If I'm down 49% now, it was worse. So, just looking at the investors that actually do own it, I said Li Lu sold out. I don't know if he'll buy back in. Maybe he saw that it was a kind of a bubble. It was obviously a bubble. I didn't buy around the bubble peak, nowhere near it, but I'm still down 49%. It's gone down so much. And actually, it's up. Did I show that graph? It's up 89%. It's up 89% from its low, which is pretty incredible. But all Chinese tech stocks have taken a beating. PDD is held by these investors. I've got this from my financial service that I subscribe to. So Bailey Gifford owns quite 2.3% of outstanding shares. These are small parts of their respective portfolios. Chase Coleman, Ray Dalio, he's added 85% recently. That's interesting in the last quarter. Chase Coleman's reduced. Ken Fisher has reduced just a little bit. Of note, Jeremy Grantham added 16.9%. He's big on getting some diversity outside the US, and it's interesting that, pretty much like Baba and PDD have kind of been going up as US stocks have been going down. Well, it's probably not accurate with Alibaba, but PDD kind of has, but they've all had massive drawdowns. There's no doubt about that. Value Partners has a small position. Paul Tudor Jones, who's pretty much a trader, has reduced a little bit, so you can't tell where he might be in and out before we even know it. So the latest trades, Catherine Wood from ARC sold out completely in the last quarter. She had been, I think they'd been selling down anyway. She's not keen on Chinese stocks at all after having reasonable positions during the bubble. Ray Dalio added, yep, and Jeremy Grantham added, yep. So interesting that, a fair amount of Western investors still own it. So market cap of 61 billion. It has the company PE ratio. This has a 59. I think this was before this earnings, probably 59. It's a massive grower, so it has been. So, well, we won't talk valuation, but so enterprise value of 49 billion. And so with the drawdown, if you're looking at this, if you're able to look at the video, you'll see that this looks like a classic bubble, but it's kind of gone back. And so over 3.84 years, this is on Ticker Terminal, we've had 60% price return still over 3.84 years. That's a 13.1% CAGR, or even with the massive drawdown, which isn't actually that bad, but it was a high, pretty much, it was termed hypergrowth, but the hypergrowth's kind of come to the end. And so this is, so I use Guru Focus, and this gives you a really rough, valuation kind of thing. You can't rely on it at all. There can be many factors that determine what it's got, but they have it, if you can see the chart, drastically undervalued, more than 50% undervalued, way more than 50%. Undervalued, significantly undervalued, they call it, and they give it a price of $135, which, as I said, you've got to do your own research. You can't rely on these things, but it's interesting. This is a rough idea what they think, and I won't go into how they work it out. But also some stats. We're up to 12 minutes so far, so I'm going to cut this off soon. I'll do the earnings call tomorrow. So gross margin, this is just a rough thing from Guru Focus, and I don't think it's taken into account these results yet. Gross margin 66, operating margin just 7.5, net margin 8.38. But the return on invested capital 20.4, return on capital employed is 13.78. 13.76. You wouldn't expect that to be high. So it's a fairly young company still. But pretty reasonable figures there, and low debt, 0.7, debt to equity 0.17. So I personally, and Warren Buffett's once said he doesn't like to see that over about 0.5, in case when a crunch comes, you really don't want your companies to have, as a general rule, not hard and fast, but over 0.5, I don't like to see that. I start to question it once it starts getting over that, unless there's a reason. And so just to the Q1 highlights. So they've had active buyers actually rose 7% year over year, and to 881.9 million. I mean, these numbers are just massive compared to even US companies, right? 881 million active buyers, and monthly active users 751.3, which is up 4% year over year. Revenue 7% year on year growth, and that's pretty low compared to previous hypergrowth years. But there's a reason for that. There's a reason they've changed their strategy. We'll talk about that next time, because it's political, it's financial, it's it's a story. So user base and user activity. So this shows the active buyers and the 7% year-on-year growth in the MAUs of monthly active users, 4%. There's a bar graph there that shows. And don't forget, they had some massive growth. I mean, and you remember in COVID, these companies had some influx of users. People were stuck at home and often had to. So, it's not bad. Revenues, non-GAAP gross profit. We can see the graph there, 39% year on year for merchandise sales and revenues. This is in RMB rather than US dollars, because that's where they are. So yeah, 39%. And I think there's another one here. Let's have a look. Non-GAAP gross profit. Yes, 70 percentage of total revenue, 70%. Okay, let's move on. Non-GAAP operating profit loss. So the bar graph there, 1, 2, 3, 4 quarters of positive and negative before that. So, and non-GAAP is more. I'm not going to go into the numbers, we're already late, but just say that, I mean, it's generally looking pretty good, balance sheet's looking good. The cash and cash equivalents, 95,221, that's in million, RMB millions, and much the same, bit more than last quarter, and sort of pretty healthy. All right, so I did listen to the earnings call, and it was interesting to see what they say. This strategy. It's good to listen to earnings calls if rather it's tempting to always do the exciting thing and look for new companies, but I mean, frankly, I've got too many. I would prefer to get down to like 10, just owning 10. I'm actually on 18 at the moment, so I could see myself. What you want is I think, for me, like a museum of 10 to 100 baggers would be good. And so I could see myself selling some of these. And is this one I want to sell? I like the idea of diversifying outside the US, and I've got around 20% in China actually. So, but is this worth keeping for the long term? I'm a reluctant seller, definitely. And so I'm going to go into the earnings call yesterday because I did find that of some interest. Okay, so if you found any value in this, if you want to, and follow along, if you want to hear the next one or next many, like and subscribe on YouTube or on Spotify, follow on Spotify and on other audio platforms elsewhere, and join me on Twitter at The Art of Value. Okay, see you next time. Thanks.